Legal. I am a divorce and custody mediator and paralegal in Minnesota. I help people divorce and handle custody cases with less conflict, less cost, and in less time. Now, when you're divorcing, the legal aspects of the divorce are not the only thing that's going on. There are lots of other things going on. Normally, I have a panel of professionals, and it's their career and zest in life to help with the other parts of the divorce process. However, David Jamison of Rainbow Mortgage had a very important family issue to handle. Um, his mother-in-law passed, so that's what happened there. And then Ken Colston is busy doing work unexpectedly, which is, of course, a good thing. But I do have Cathy Hietala with me. Cathy, please introduce yourself.
Hi, I'm Cathy Hietala. I'm a financial advisor with the Terrio Group. I specialize in working with our veterans and military, as well as people going through divorce. So I look forward to working with all of you.
Awesome. Thanks, Cathy. So, um, here's the rundown of the unfun legal stuff when you're divorcing. And so, the first part of divorce is dividing the assets. And your assets include the house, the cars, the boats, all of the stuff in the house, timeshares, um, your retirement investment accounts, like everything that you guys either purchased or accrued during the marriage. And now, what gets divided during the divorce are the marital assets. So, the marital assets are those that were accrued or purchased during the marriage. Now, there is marital interest in a non marital home. So, if you're living in a house that one of you purchased before the marriage, there's a funny, lovely thing we'll talk about if that's in the situation. But otherwise, the main rule of law is you add up all value of all the assets and say it's $1 million. And then the rule of law is that each of you walks away with 50% of the value of the assets. So that'd be $500,000. So how we start out is we say, who wants what? And if one of you, wants to keep your retirement funds and they're, excuse me, are $500,000, say in your IRA, hey, there's your half right there. And so that means then that the other person is going to get the cars and um, all the other stuff, the equity in the home and money in the bank and all that kind of stuff. Now, of course, you probably need your vehicle. So we can work out an agreement there where you could still keep your vehicle. But, basically we just start from what each of you wants, work our way backwards until the division of assets is approximately 50-50. There are some instances where it would be appropriate to divide the assets 40-60, such as when one of the spouses is not working and therefore has a lesser ability to accumulate assets in the future. Now, the second thing that we do is dividing of the debts. Sometimes this is a more contentious point than dividing the assets because one person may have created all the debts. But you know what? You guys are married. So you are both responsible for every single debt that either of you creates. Yes, even if you didn't know the debt existed and you never would have agreed to that and anything you can think of, you are still responsible for it. Sorry to be the bearer of bad news. So we're going to take and add all the debts together. And that does include student loans. You might be thinking, but hey, I'm not even going to benefit from, that person getting that education. You were married when the person took the loan out, so you bear some responsibility for that loan. So we're going to add all the debts up And then say the debts total $200,000. And this is separate from the house because that's like a property ownership division issue. And so we've got, say, $200,000 of debts, and we divide the debts by ability to pay. Ability to pay means how much income does each of you have. So if one of you has no income, but does have the potential to earn a certain amount of income after the marriage, then we'll look at the potential income. And if the person doesn't have potential to earn income after the marriage, then we're just going to have to assume that they have no ability to pay. And the person who has ability to pay will get all the debt. But for simplicity, let's just say that, one party earns twice as much as the other. And that means that that party is going to take twice as much debt. So if we've got, $200,000 of debt, then we're going to divide that debt. Probably, would that be 75,000 for the one and 125 for the other? Something like that. I can't do math in my head, apparently. So we would just make sure that the one party walks away with twice as much of the debt. Now, the cool thing about working together to divorce is that you guys can veer off a little bit from these rules of law because you're working together. So, we'll work out an agreement that you both like. Now, if you have children, there are lots of different things you're going to need to decide. You're going to need to decide the regular parenting time, which is, like, where are the kids going to be? And you can have joint physical custody where the kids are with each parent half the time. And, which works well if the parents live, within, like a half an hour of each other, because we don't want the drive to school to be too long for the kids, and neither does the court. And then we have sole physical custody, and that is when one parent has more than half of the parenting time. And we'll look at, people's work schedules, people's social calendars, who has been taking care of the kids more, or if you've both been equally taking care of the kids. And we'll see what works for you and the kids. And then you'll also want to discuss things like vacation, parenting time, and holidays, and also communication with the children when you're not with the children. This has become a really big issue in some marriages in my social circle, or divorces, excuse me, in my social circle. So we're going to make sure to put in there that when the kids aren't with you, unless they're like in school or an extracurricular activity or eating a meal, that they should have the ability to talk to you. And then, if one of the parties has not been working during the marriage, then we'll talk about spousal maintenance, and we'll talk about that if that needs to be done. It's not quite as often these days. So that is a rundown of the legalese. I hope that your brain doesn't hurt too much. And I am going to be available during this event to answer questions. And you can either put them in the chat box or message them to Christie Lea Thompson. And so the next thing that we're going to talk about during the divorce and separation process is selling and buying houses. That's usually the biggest asset. And Ken Colston usually talks about that. However, he is not available. But you know what? I have heard tons of real estate agents talk about it. So I have somewhat of a grasp. So right now, the housing market is super hot. Like, houses are selling in 2 to 3 days. They are selling for anywhere from $20,000 to $100,000 above the asking price or appraised price. And that's pretty scary for a lot of people who are buying houses, really awesome for people who are selling houses. And if people are concerned about the COVID-19 precautions are still being taken. and you want to get your house ready for sale like right away, because the houses are selling like that. So, with the first showing, you want to have the house in the best shape possible. And then that's about all I know. But Ken Colston, his contact information is going to be available in the post for this video, and you can ask him all the other questions you have. And I will tell you, it takes one to buy and two to sell. So if you're in a divorce process or you're thinking about getting divorced, you are going to have to get your spouse on board for that, even if the person isn't on the title to the home. All right. And so then buying a house, it's a rough time to buy. However, the interest rates are still good. So it's not a terrible time to buy. But it's a little more difficult because, like I said, the houses are going for 20 to 50 or 100 grand over the appraised price. When you are buying, you need to be like pre-approved and, like have all of your ducks in a row, like right away, because it's, you've got so many people. I mean, you've got like 30 plus offers on each house. And if your offer is not rock solid, I mean, they'll look at it for 3 seconds and just ditch it. So, and that is why you're going to want to work with David Jamison of Rainbow Mortgage. He is not only a veteran of the Minnesota Army National Guard for 8 years, but he has been a mortgage banker for, I believe it's like 20 plus years. And he and his wife, Gail, run Rainbow Mortgage. And he and Rainbow Mortgage are actually responsible for having a federal law changed, and to make it be more reflective of how mortgages actually work. So he's very on top of everything, and mortgage rates now are still very good. I mean, so good compared to what they have been, even like say 2 years ago. And so it's still a good time to buy a house. And you've got conventional and FHA loans, and you can get first-time home buyer loan programs where you have to have less down payment. And so, again, contact David Jamison for more information about those mortgages. But Cathy has some information that is specific to VA loans.
Thank you, Christie. Some things that are specific to VA loans for those that qualify. There's no down payment on a VA loan, which can really help a person get into a home. However, sometimes I recommend doing a down payment because you never know those what ifs, depending on what your monthly payment is and your ability to be able to afford it if you become unemployed or disabled or divorced or a pandemic hits. We just never know what's going to happen. So make sure that you plan for those what ifs, and that no matter what happens, you can afford that. So sometimes it's better to put a down payment down just to lower that monthly payment. But if it's going to help you get into a house, you can do it without a down payment through a VA loan. Another good thing about the VA loan is there's no PMI insurance, which will lower your monthly amounts. And that can be a considerable amount. You may have lower closing costs. And one more thing about VA loans that's a negative is that they have stricter inspections. And right now, while the market is so hot out there that there's so much competition, some sellers aren't even looking at VA loans, which is really a shame because they don't want to go through those strict inspections, and they don't have to if they have 10 buyers lined up. But what you can do is what we sometimes call write a love letter. And if you write that letter saying, you know, I'm a veteran, here's why I want your home, here's why I want to buy it, this is, you know, I served our country, you know, they may look at you as an option. And if they don't have anything to fear about an inspection in their home, they may be willing to do that. So that may be a good option there. And that's about all I have on the mortgage side of things.
Awesome. Thanks, Cathy. So we've talked about probably your biggest physical asset of the marriage, your home. And now, Cathy, please talk to us about how you help people think about their finances during the divorce process.
Yeah, there's special rules when it comes to the uniformed service accounts. So as you're going through the divorce process, I say the number one thing you want to know is that your accounts, your TSP, can be frozen. Once that divorce paper is filed, your accounts can be frozen. They'll let you pay in and they'll let you pay back loans, but they won't let you take any money out. So if you're dependent upon that money to live on, you're going to want to take that money out before those divorce papers are finalized. And a divorce can take a year or two. So make sure and plan, but you also have to be careful that you're not taking out, and if you're under 59 and a half and incurring penalties, and you will be taxed on the money that you take out. So you really need to look at that balance, but it's important to know that those assets can be frozen. And then the uniform service account, another thing to know is that a former spouse is not necessarily entitled to a portion of that money. They can be awarded money, but they're not entitled to it. There's what's called a 10-10 rule, and then there's other rules. But a 10-10 rule says you have to have been married 10 years while you've served 10 years of, I want to say active, but it's qualified service. And they have to be simultaneously. And you have to have been married to each other. That's a little detail, not somebody else. So 10 years married to each other while serving in those 10 years. And if that does not line up, your spouse may not be entitled to some of your money. Another thing I like to touch on is, the combat zone. If you're active in a combat zone, the military may put money into your TSP, and that money will not be taxed federally when you take that out. So, however, the earnings on that, the growth on that can be taxed. So if you've had that account for say 20 years and it's grown, it's doubled, and now you are dividing that in the divorce, and you're told that, well, you're not going to be taxed on that. Well, that's not true. If you divide it up, the growth is taxed. So half of that's going to be taxed. So you want to make sure that you plan for that in the divorce so that your spouse pays their half of the tax and you pay your half of the tax. You don't want to incur both tax bills when you're giving half of that money away. We went over frozen and quadro. A lot of people are familiar with that term, the Qualified Domestic Relations Order. That it does not apply to the TSP. The TSP has its own, it's called the Qualified Retirement Benefits Court Order, and it goes specifically to the TSP. So there's different rules inside of there. So if you have a quadro, know that it doesn't apply to your TSP. Another thing that's really important is your beneficiaries. If possible, make sure and change your beneficiaries if you're going through a divorce, unless you want your soon-to-be ex to be the beneficiary if you pass away during the divorce. And if nobody's listed on there as a beneficiary, know that your spouse will get it until that divorce is finalized, unless it's in a trust. So understand how the beneficiaries work. And then there was one more thing I wanted to touch on, and it's an annuity. Having a qualified annuity inside of a TSP is not always the best option. You're losing out on a lot of things. If you're looking at an annuity for income down the road, you want to look at it as a separate entity outside of your TSP, because you could be losing out on the family income rider, the doubler, which doubles your income if you're going to a long-term care event, upfront bonuses, rate locks, where you can lock in a higher interest rate at any time during the year, and Roth options. So those are some of the things you can lose out by doing a annuity inside of a TSP through the military. Otherwise, most military accounts are real good accounts. To have the TSP has some really good benefits to it. And that's the basis of things to watch out for when you're going through a divorce, and to know, and I highly recommend working with a professional that understands military benefits when going through a divorce. Oh, thank you, Christy.
Absolutely. And could you talk about, like the regular, because a lot of military people, are retired from the military and they're now, working civilian jobs. So could you also talk about the regular retirement plans, 401ks, IRAs, and then what is a quadro?
Yeah. Qualified domestic relation order. That's just a court order saying that you're going to divide up your 401k or your IRA. And it's just a court order saying that you have to move that money over to your soon-to-be former spouse. That's what that is. And it's good to transfer it. You could roll it over, which means you can get a check and then deposit that check. But I do direct transfers. That way there's no losing the check, because you only have X amount of days to get that transferred into your account, or you're going to incur taxes and or penalties on that. So it's easy enough just to submit a piece of paper that will transfer it from one account to the other, and there's no taxes, no penalty on that. So, and like Christy mentioned in the beginning, the division of assets, that's something that, you work out between who's going to get the house, or you're going to sell the house. And it's best to have a plan in place to say what will really work. If you want your ex to keep the house, how much of the assets will you get to keep? Will that get you through if you want to buy a new house? So we can put all of those numbers on paper and play them out and forecast for you. And we can do all different scenarios and line them up to say, what is the best option that works for both of you?
Thanks. Thanks, Cathy. And so if you are going to be relying on child support or spousal maintenance to meet some of your monthly bills, especially your mortgage, there are a few things that you should know. I kind of forgot to talk about this in the mortgage time. So when you are applying for a mortgage on your own, you're going to need to have the child support payments, depending on the loan, anywhere from 3 to 6 months already, because the mortgage company needs to know that those payments are going to actually happen. And the mortgage payments need to continue to happen for a minimum of 3 years. So say you have a 16-year-old, unless your spouse has agreed to pay child support until your child is 21, that is not going to be adequate. So these are all things that, you want to work with your legal professional, your financial professional, your mortgage banker. Make sure you have all of those professionals who are telling you those things, because otherwise you're just going to think, oh yeah, I'm getting child support, so I can afford that mortgage. And then you're going to be shocked when you can't get the mortgage because you haven't been receiving the child support for 3 to 6 months. I have some creative ideas about how we can get around, and it's not get around, but how we can work with that 3 to 6 month requirement. The other party would have to be willing to work with you. But again, Dave and I can give you lots of information about that. And I just want to really reinforce that it's important to talk to a financial advisor about the division of assets. If you don't have a financial advisor, there's Cathy. And because there are so many rules and things that we just don't know about as regular people, and especially with the military ones, that it's we just really need help. And so another thing that you'll take care of when you're divorcing is you might want to rewrite your estate documents, so that you have funds going where you would like them to go. And I can brainstorm, and you can contact me, and I can send you to some state law attorneys who are veterans. And so after we divorce, if now with Christie Legal, your divorce process should only take 2 months. 1 to 2 months at most, for the court process, and then hopefully only a month for us working through hashing through all the issues. So it should be about 3 months. And when you're lawyered up, it could take a year and a half or more. But when you're finally done with the divorce process, then after you get divorced, then you need to replan your financial future. So, Cathy, please tell us how you help people who have divorced or separated to replan their financial future.
That's the best part of my job, is having people have that moment that they're done and they're starting their new path to their future. And that's where financial planning is that much more important, because now we're looking at what do you have now? What do you have coming in from the divorce? And what do you see in your future? How much house can you afford? Or maybe a new vehicle, college for the kids, and retirement. We always want to start saving at least a portion for retirement early and build up on that. But it's putting all those things in play and laying it out as a picture and a roadmap for you. And we can tweak things along the way, but it's important to at least have the basis down so you have a clear picture of what you can afford and what you need to do to get to where you want to go. Thank you.
Awesome. Thanks, Cathy. So I am not seeing any questions in the chat box, and I almost forgot to check my message board here. Oh, no messages in the messenger. So thank you for your time this afternoon, and our contact information will be in the video post very shortly. And we would love to answer any questions that you have. You need to have a team working with you when you divorce. If you don't, it is not going to go well. I get at least one call a month from someone who tried to handle his or her divorce on his or hers, both of their on their own, and it exploded in their face, and they're not getting the property they had wanted, and people aren't paying the debts that they thought they were going to be paying. And the worst thing that I've had somebody call me and say so far is that their documents were so bad that the judge took them out of the joint divorce process and put them in the conflictual divorce process. And they have a trial scheduled, a trial. Like 1% of divorce cases go to trial. And I'm quite sure that that is not what they intended when they were filing for amicable joint divorce. But when you don't have, key important things in your divorce documents, then the court has no other choice than to take it over for you and enforce the laws of Minnesota. And so thanks very much for your time. Do you have anything else to say, Cathy?
No, thank you very much. I look forward to working with our veterans.
Yep. And thank you for your service.
Thank you.